2021, ProPublica obtained and published years of leaked IRS data on the wealthiest Americans. What it revealed was not a scandal of illegal tax evasion. It was something far more unsettling: entirely legal, systematically engineered tax avoidance on a scale most people cannot comprehend. Jeff Bezos paid $0 in federal income tax in 2007 and again in 2011. During those same years, his net worth grew by billions. Warren Buffett publicly acknowledged his effective tax rate was lower than his secretary's. Elon Musk paid an effective rate of 3.27% between 2014 and 2018 on a reported wealth increase of $13.9 billion. These are not criminals. These are people who hired the best tax professionals in the world and used the code exactly as it was written. Buy, borrow, die. This is the foundational strategy and the reason billionaires can accumulate enormous wealth while reporting almost no taxable income. Step 1. Buy appreciating assets. Stocks, real estate, private companies. These assets grow in value, but growth is not income. The tax code only triggers when you sell, which is called realizing a gain. Bezos's Amazon stock can increase by $10 billion in a calendar year and generate zero tax liability because he did not sell a single share. Step 2. Borrow. When you need cash to fund your lifestyle, buy a yacht, invest in a new venture, acquire property. You borrow against your assets using them as collateral. Loans are not income. They are not taxable under any current U.S. tax provision. The interest paid on those loans is often deductible as a business expense. You are living on borrowed money while your assets continue compounding untouched. Step 3. Die. This is where the strategy reaches its most extraordinary conclusion. Under current U.S. law, when assets are inherited, the cost basis resets to the fair market value on the date of death. This is called the step-up in basis. If you bought stock at $2 per share and it grew to $2,000 per share over 40 years, your heir inherits it at a $2,000 basis. Capital gains tax on the entire $1,998 per share lifetime gain, 0, legally erased at death. That is not an oversight in the code. It was written deliberately and has survived every attempt at reform. The real estate machine. Real estate adds a separate and powerful layer of tax engineering. The tax code allows property owners to depreciate their buildings, claiming a paper loss each year reflecting the theoretical wear of the physical structure. This depreciation offsets real income, reducing taxable income on paper even while the property physically appreciates. Donald Trump used a reported $916 million loss in 1995, largely from real estate depreciation and write-offs, to potentially eliminate his federal income tax liability for up to 18 years. Entirely legal. Exactly what the code was written to allow. Real estate investors also use the 1031 exchange, rolling profits from one property sale directly into a new purchase, deferring capital gains indefinitely. A portfolio can grow from $1 million to $100 million over a lifetime without triggering a single capital gains event. The charitable foundation strategy. When a billionaire donates appreciated stock to their own foundation, several things happen simultaneously. They avoid capital gains tax on the appreciation. They receive a deduction equal to the stock's full current market value. And if it is a private foundation they control, they retain significant influence over how that money is deployed. The system working as designed. None of these strategies require breaking the law. The carried interest loophole allows hedge fund managers to pay 20% on their earnings instead of the 37% income tax rate that applies to a surgeon or an engineer earning the same amount. Delaware and Wyoming offer corporate structures that minimize tax exposure across multiple states. Offshore entities in the Cayman Islands provide additional deferral opportunities on international income. Like and subscribe for more exposés of the financial architecture shaping your world. Drop a comment. Which strategy shocked you most? Thanks for watching.